Well, the RBA didn't surprise today. They cut as widely expected by 1/4 percentage point. The financial market was pricing in a 100% probability of this event occurring. The markets were actually more interested in a supersized double rate cut in June, something similar to follow on from May. And they had put a 60 to 70% probability on that occurring. In explaining its decision, the RBA pointed to the demonstrable deterioration in global economic conditions over the last month and noted that growth in Australia remained modest and that its inflation outlook was benign. The reduction in the RBA's cash rate to 3.5% will reduce interest rates savers receive, but also cut home loan rates. We should see the discounted home loan rate fall to around 6%, and there should be offers in the market in the high fives, which is obviously quite attractive. In terms of the housing market, we heard today that AFG, Australia's biggest mortgage broker, they account for about 10% of the entire market, had approved $3 billion worth of home loans in the month just past, in the month of May. That was the single biggest month they've recorded for new home loan approvals over the last 3 years. A very surprising result, given that May is typically a seasonally weak month. In terms of other information, we get the GDP data tomorrow. This will tell us whether the economy is indeed operating at a below trend pace, as many claim. This is for the first quarter. We'll also get updates to the fourth quarter economic growth data. That was a very weak print, and it'll be interesting to see if there are any revisions to the fourth quarter information. Finally, on Thursday, we get the unemployment data. Recall the unemployment rate fell to 4.9% from 5.2% the last time it printed. So the key question will be, when is this significant deterioration in the labour market going to really transpire? Almost everyone expects the unemployment rate to bounce up in the medium term over the next 12 months to between 5.5% and 6%. That's all. Thank you.